The Alberta government is forecasting a $465 million surplus this fiscal year, despite low oil prices, which have resulted in a $644 million hit to bitumen royalties and an expected job loss of 31,000 jobs this year. Finance Minister Robin Campbell gave the third quarter fiscal update on Tuesday.
Despite the fiscal circumstances we find ourselves in today, Albertans remain on track for a balanced budget at the end of this fiscal year. We expect to end the fiscal year with a $465 million surplus. That's $622 million less than the forecasted budget. Even though we've downgraded the forecast, higher energy prices at the beginning of the fiscal year, along with improved revenue forecasts in other areas, should result in a balanced budget for 14-15. But there are significant challenges ahead. There's no question energy prices are driving Alberta's fiscal story right now. And after peaking at $108 per barrel last June, world oil prices have plummeted by more than 50%. And prices remain around the $50 mark today, and we may not have yet hit the bottom. As a result, we've lowered the WTI forecast to an average of $79 US for 2014-15, significantly down from the $95 US average forecasted budget. Alberta is no stranger to volatility of energy prices, and there's been substantial downward slide in crude oil prices as we head into the next fiscal year. And relying on volatile resource revenue to fund government programs and services is not prudent fiscal management. We know, and Albertans have told us, we can no longer count on oil to sustain our revenues. Even with declining oil prices, our revised revenue forecast at third quarter is $397 million higher than the budget estimate. That's despite the non-renewable resource revenue forecast being lowered by $503 million. This decrease was offset by increases in other areas like corporate tax revenue, investment income, both higher than expected in the first 9 months of the fiscal year. Operational expenses is up third quarter, now forecast at $41.2 billion. That's about $800 million higher than forecasted budget. This is due primarily to forest fires, mountain pine beetle, the Canada-Alberta Job Fund, and agriculture and flood assistance. Negotiated settlements made by previous administrations, including several compensation agreements reached after the release of Budget 2014, have also increased the projected spending by $2.6 billion over the next 3 years. This is causing added pressure at a time when the current government is dealing with significant revenue shortfall. Public infrastructure is still a priority, as our growing population continues to cause infrastructure pressures. Even when the price of oil is low, we must still build schools, roads, and hospitals, or risk falling further behind on infrastructure that Albertans need. That said, capital spending was lower in the first 9 months of the fiscal year than estimated at budget. The revised 2014-15 capital plan is now forecast at $6.5 billion. This is lower than budget due to primarily to reprofiling of some projects and partly offset by increases for school projects. No projects have been cancelled, and we are continuing to invest in essential infrastructure even when we need to borrow to do so. Direct borrowing for the capital plan is now estimated at $3 billion, which is $1.9 billion lower than budget. And because our borrowing is lower, our borrowing costs are also down. We will continue to build because our population continues to grow. Over the next year, we still expect our province to grow by 60,000 to 70,000 people. That's less than the 100,000 we welcomed this year and last year, but still a significant number of new Albertans. People have been drawn to our province by our strong economic indicators, and especially for jobs. However, employment is expected to increase on average by only 1% in 2015, lower than the 2.2% in 2014. Like energy prices, and because of energy prices, Alberta's economy will experience some downward shifts. Real GDP growth is forecast to slow to just 0.6% growth in 2015, due in a large part to a pullback in energy investment, down from 3% forecasted budget. There are economists who predict oil prices will rise again this year, and again, there's those who think they won't. There's also conflicting views as to whether or not Alberta will be in a recession. Because of lower energy prices, Alberta has lost 15% of our revenue. That's about the entire annual education budget, or it's equivalent to 1/3 of all salaries for the entire public sector, including doctors, nurses, and teachers. The Premier has been very clear, this is not business as usual, and make no mistake, we're facing about a $7 billion revenue shortfall in budget 2015, and possibly larger in future years. So there are going to be some tough decisions that will affect all Albertans. It won't be easy, and there will be no one-size-fits-all solution. What we need to do, and what we will do, is fix the fiscal foundation of the province so future generations don't face the same issues we do today.